Hello everybody and welcome back to our channel. From August 2020 to March 8, 2021, it was a little frustrating to hold gold and silver as the prices were going lower. At the period, we saw the prices declining in gold and silver and a lot of overvalued assets becoming even more overvalued. Needless to say, this time of gold and silver consolidation is now over and we are seeing the reverse in the market starting. What do I mean by the reverse? Well, overvalued assets that were on a bubble are starting to deflate and gold and silver moving higher. We all notice gold coming from the year low in March to break above $1,900 last week. So that was a move in price of $230 an ounce, and silver is now about $28 an ounce, coming from the year lows of $23.70. So since the lows in 2021, gold has moved 14% up, and silver has moved about 18% since the year lows. On last week, gold was up 1.24%, while silver went up 1.4%. But what is behind the change in the market that's pushing the price of gold and silver higher and devaluing overvalued stocks? Well, just weeks ago, the world was saying that Bitcoin was eating gold's lunch and it was the new gold, digital gold, store of value. Well, by the time I said that Bitcoin could eat gold's lunch for a while, but just as the dollar and the British pound also ate gold's lunch for a while. But on the long term, on the long run, gold eats everyone's dinner and breakfast. Well, it's clear now that Bitcoin is not a hedge against inflation, not a store of value, not a digital gold. Still though, if Bitcoin or other cryptocurrencies fall to a certain level of price, I will add some to my portfolio, as in my portfolio there is a small part for speculation. So your portfolio should be diversified. You should not put all your eggs in one basket. Not have all your allocations in gold, not all your allocations in silver, but you should diversify. So gold was not going up first because the market was in fact expecting deflation. First, the market was expecting deflation. There was debate, we're going to have inflation or deflation, and a lot of people, a lot of analysts were expecting deflation. Then the Fed was able to convince everybody that there will be no inflation, and if there was inflation, it will be temporary. But the Fed is now losing its ability to convince people that there will be no risk of inflation, because inflation is already here. So if you want to allocate gold and silver to your portfolio, and if you are waiting for a pullback in prices to do so, then I might have bad news for you. I doubt that the price of gold and silver will get significantly lower in short term to justify you waiting for a dip to buy. I expect gold and silver to get higher for sure. What I'm not sure yet is the speed of the increase in price. But until it happens, we will start seeing the premiums on the physical metals increasing too. Now, if you want to invest in gold and silver miners, you can get higher returns that you would have holding the physical metals, as miners are more volatile. But this volatility also offers more risks in downturns. So to invest in gold and silver miners is a bet that the price of the metals will keep going up. Needless to say that miners offer more risk. As I have mentioned in previous videos, I expect a bigger move in the prices of gold and silver on the second half of the year. But as we enter now the month of June, the second half of 2021 is just around the corner. On the past few days and weeks, the major factors helping the gold and silver prices, other than inflation, was in my view the weaker dollar and crypto volatility. As money wants to leave crypto and fiat currencies, gold and silver are good bets to receive investment inflows. In separate news, the Bank of Thailand announced that they bought 44 tons of gold in the month of April. Now, it's already much clearer for us that gold and silver are about to shine again, but it's not clear yet for general public. With that in mind, if you already have protection in precious metals in your portfolio, it's a good time now to hold it. If you don't have exposure in precious metals, then it's a good time to allocate some. The time is in our favor. The gold to silver ratio is currently at 67 ounces of silver to 1 ounce of gold. It's widely expected that this ratio could get much lower, consequently benefiting silver investors over gold investors. To repeat, there is a rotation in the markets from speculative assets to more defensive and traditional assets like gold and high dividend stocks. 50% of my portfolio today is in dividend stocks. Some of these companies that I own in my portfolio are paying 8, 11, 13 and even 18% in dividends. So if you want me to share information on high dividend stocks, you write down on the comment section and I'll make a video of it. Other assets that protects against rising inflation is real estate. I was recently watching an interview from David Hunter, which is a contrarian, and David Hunter believes that the price of gold is about to reach $2,500 this year, then pull back to $2,000 before going much higher. David Hunter was right last year in March when the market crashed. He was announcing that the market would melt up with the S&P 500 reaching 4,200 points. At the time, everybody thought he was talking nonsense, but his prediction turned to be very, very accurate. Now, if you are enjoying this video so far, don't forget to click on the like button. It helps YouTube to promote the video and make this content to reach more people. So as we enter a new month, I will give here my forecast for gold and silver prices, but don't base your investment in this forecast. You must do your own research and analysis. So for the month of June, 1 month period from now, I expect to see gold around $2,030 by the end of the month and silver to reach $30 an ounce also by the end of June. So in 4 weeks period, the market will tell me if my forecast turned to be wrong or right. This will complete the video for today. Thanks for watching. Protect your wealth. Stay safe. Take care.